Alright, so this video is a little bit different. It's going to take a look at this first study, which was I think, heart of Wyckoff's work. And basically from a different angle. The angle is the turning points, and analyzing how those turning points occurred for trend and swings. So change in trend, change in swings. That's the whole point of this study, by the way. Like, that's what he's really trying to get at, and how to read volume. So you see that this over here, you had a climax. So what followed by volume off the bottom, and had follow through. It set, and then it had a secondary test where volume early December volume versus late December volume. You can clearly see the difference between volume then and now. I'm not then and now, but prior downswing and then the current downswing at that time. So the whole point of this is Climaxes created a turning point, secondary test. Climax, secondary test, and a lot of volume off the bottom here. So after that, you have the next turning point. Next turning point came over here. That was a minor climax, right? But before I go that, I also want to talk about this. This right here is also climax. He doesn't mention it, but it is. It's F for reward, Y. It's the biggest in 1, 2, 3, 4, 5, 6, 7, 8. 8 bars on a pullback. And he also mentioned that this is a springboard. What are the elements that make it a springboard? All that climaxes in the back, the secondary test that's on low volume, blah, blah, blah. Alright, so all of that. Next turning point up here. What does he say about this turning point? He says it's a buying climax. And a bull's break, the stalemate. How do they do that? It's all these cluster closes and all that shit over here. So it was encountering resistance. You can see that here. Green, red, green, red, red or doji, I don't know. Green, red. So green, red, green, red, green, red. That basically sets up. That usually is saying the market's having a hard time advancing, and you get a reversal. You'll see that it's some type of hesitation. And it could be the saturated market. It could also be just resistance. It could also be lack of demand. What are the technical? How do you detect it? By lack of progress in the closes and shortening the thrust. All right. Having said that, on the pullback again, the climax is right here. Bang, minor climax, secondary, and some testing over here where volume totally dips right here. Very game over right there. You have that climax, and you have the low volume test right there. This is the selling climax. That's the reversal. That's the test. Very bullish. Goes down. Shit volume. Reversal. Market ready to go. Over here again. This is very bullish. Why? Because of that gradual increase in volume is always good. It shows that it's not lack of demand there. It's just increasing demand, even if price is going up. But this was climactic bar. Why? It's at resistance. Then it starts going sideways and eventually breaks out. This is the area of absorption. What is absorbing? The prior high. Here you have your next climax. This climax. Here is the very low volume, which is telling you that anticipate a rally. So attempted to rally, threatening bar, does nothing. This is the concept of a threatening bar. On increasing volume, looks bearish, but price runs away from it. And then finally, the climax to end the trend. So this is not a minor climax, it's a major climax. It's a major buying climax, just like this is a major selling climax. The minor climaxes are here. Even though the spread is not wide, who cares? The volume is there. This is the minor climax, minor climax, minor climax. And this also must be noted. This is like the low volume dullness. I don't really know what to call it, but this will do it. And you see this many times. Where else do you see it? You see it right here. See that? That attempted where it dips below 1 million. It's ready to go down. Heavy selling minor rally with minor volume. Here and about here. Yeah. Alright. So here is probably here somewhere. Typically like here. Volume really is bad. And then it just starts to go. Over here again, that minor volume is really important. And this is the major buying climax. Alright. All this I don't want to go through, I get really tired, but over here is the climax that terminates the sideways distribution. But this climax is there, but it's realized a couple of bars later, like it takes about 2 or 3 bars, and then does something here. Climax, lack of demand, and ready to go. Alright, so we're just analyzing the turning points. So over here is just saying this market is hinging, it attempts to rally and it's reversed. Then it goes down. Over here, when it goes down, what do you notice? Price increases, increasing volume. This is liquidation. When it goes down like that, increasing volume is liquidation. Very bearish. By the way, this is one of the reasons why you need bar volume and not just wave volume. A lot of folks will say, oh, I just want to use wave volume. Wave volume is not the be-all, end-all. A lot of things wave volume will not give you. It will not give you liquidation. All it's doing is summing the volume, so it always looks like it's going up. But it will not show you this pattern of volume that indicates liquidation. You have to have bar volume along with wave volume. Although on an intraday basis it's more helpful to have, in my opinion, wave volume, because in the morning, because bar volume gets really screwy in the morning and at the end, and in the middle it's like very little. But on the daily chart for sure you want bar volume first and foremost. Anyway, so over here what he say? He says buyers are stuck. So over here volume increases, and then somewhere over here, this is very important behavior. What's so important about it is short covering rally. Why? Went down, price went down like 12 points or something, I don't remember how much, and it rallies. And what happened? Immediate reversal, indication of short covering. Well, how do you know? No follow through. Short covering is very quick. It typically does not have follow through. So, and then after that you see a lack of demand rally, and over here climax, bang, reversal, ready to go down, 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 down. And then finally over here you have that climax. This is more of a major climax. Why? It terminates the trend. How do you distinguish major and minor? Obviously the major is not relative to a swing. The minor is for swings. The major is for multiple swings, so it has very high volume. Here you have a change of behavior. High, 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 low, and then it pulls back. Here the volume dips. This right here is telling you that very bullish. Right there. Here you have the reversal. It goes up here. What happened? Well, as it goes to resistance, volume dissipates, pressure is less. Market's not ready to go up. So it's going to go back down and retest support. This bar here is an increase in activity at resistance. It's difficult to tell what that really is, but look at the bar before it and the volume before it. It totally dries up. That's what's important at a resistance area. Okay, and then it goes down, and over here you can't really tell shit, but just test support. And from that area you have a breakout, increasing volume, high and close. What is he saying about that? Very likely it's going to have a follow through day or a follow day. Why? Big range, high and close, takes out everything, very bullish, so typically they have follow up days. Here you had a problem. What's the problem? Volume is too high. Volume is way too high. And then pulls back. The volume is high, but it's say about 60% of the prior bar. After that, you have another bar, which extremely high volume again. One of these is the climax. All right, you'll only know after the testing or the reversal. You don't really know because here, for example, you know it's a climax because you have a reversal and eventually, it goes down. But here, do you know? You don't. Are there any levels or anything you could test against? Well, you could go all the way back here, maybe, right? So here it goes to resistance. As it goes to resistance, bang, high volume. Why? They're selling into resistance. That's terminating the swing. Now you have 2 days, 2 or 3 days. They sold up here, sold back on the way down. You have 2 days here, but look at the volume. Dip, dip, dip. What happens here? Right there. Very little volume. What does that mean? It's ready to die. So here that is market is on a hinge and ready to break. So you understand that both high and low volume are important, and the pattern of that volume increasing or decreasing is also important, and the levels as it moves are also very important. So it's like you multiple factors here. That's why it's not going to be possible to do this via indicator. Anyway, here he doesn't say it, but I believe this is some type of minor climax. And this is a test, very low, dullness, and a reversal. Anyway, it goes down and eventually goes here, high volume. And we notice the volume totally dips here. Comes up some, very bad, and ready to reverse. How do you know it's bad? I mean, it's just like low volume. Green, green, red, green, green, red. 2 green, 1 red. 2 green, 1 red. Very low volume. And going into that same zone. No, it's not gonna go through it. After that, it goes here. Ding, 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 ding. Here breaks increase. Goes down, 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 dips right here, and it just goes down. And here's where it kind of gets interesting. How does it get interesting? We got big ball, big volume, but again, if we got to watch the follow through, because why? Because many times this is short covering. What you think is volume off the bottom or a change of behavior, many times is just short covering. It could also be profit taking. So when you see those rallies occur and then that big red wave, you can't be sure that it's a change of behavior. Just like you can't be sure right here this is a bullish change of behavior. You don't know until all the other stuff. So over here, this right here is, I hate this shit. And then it goes up here, increases, volume increases, small bar in this range, and what happens? Goes up, reversal, alright, and starts breaking down again. I'm not sure what he mentioned. Okay, here it is. As it goes back down to support, it attempts to rally, and look what happens. The rally is very feeble, not just feeble, but very feeble. And this is your lack of demand. This is your lack of pressure. Look at the volumes, all under 1 million. That's bad. That's your break, which is 1.25, I think. And it's going up there, and it just, right there is your low volume turning point. And there's your reversal. Continues to go down. As it goes down, it's attracting volume, which means what? Liquidation has resumed. Continues to go, continues to go, continues to go. Volumes increasing, 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 increasing. Increasing. Here it gets interesting. Why? Very high volume. And the close, lack of progress in the close. So you're expecting a bounce. The bounce does happen, but it's short-lived. Why? Immediate selling. Sell the bounce. So this is what he calls effervescent rally. I think there'll be more examples of this to better understand what this effervescent rally is. But as far as I'm concerned, it's a 1-bar rally. So it means that's bullshit rally. And it oh shit. So give me 1 second. Anyway, so it goes down, and you see the volume increasing. And this, to me, at first it looks really bearish because it's increasing, has liquidation. But over here, it accelerates. It accelerates in terms of price movement, and then you have this big rally off the low. And also, before I go any further, notice that these, what he wants to bring your attention here is that it's tagging former supports. When price goes to support, former support a few months ago, whatever, it has a tendency to rally for whatever reason. Okay, even here when it retests that support, it has a tendency to rally. That's where the rallies are expected. So anyway, it goes down, and then over here, what makes this different than this? It makes a difference because it has multiple bars at higher lows. So that follow through, because buying is not being done on a day. If it's being done on one day, what kind of buying is that for an entire move of a trend? If it's buying on for one day, don't expect a long move, because you have to accumulate and buy and buy and buy and buy in order for the price later on to go in a trend up, in order to sell it on each rally. So there has to be a significant amount of buying in order for an entire trend to change. It cannot be a 1-bar thing. 1 bar is covering. And that's my simplified logic. But over here, this buy. So if you're buying that much, how could it be short covering? Short cover everything here and then puke it later. So anyway, so now the tests come down and they're on much lower volume, bullish. Goes up, that's bearish, but get ready for it. Right? This is bullish. Goes up, not liking it. Climaxes at resistance, pulls back just a little. This again, this is very confusing because over here the volume dips like that and forms some weird shit at this area. So it gets very, very complicated and goes right back down. Like if I see this right here, that's not bullish, you know. If it's dipping and it just stops right there, I mean, this is a pullback, right? This one's a little bit harder because I don't know what it is. All I see is it's just dead center and very low volume, so something's going to give because of the extreme dullness. In this case, it goes down. Over here, I think he mentioned some type of selling climax. I'm not really sure. It goes down, don't like it. Here it dips, reverses, and I can't really read this. Here, it takes this area and increases in volume. Okay, so green, red, and then green. This is expected. Does it have follow through? It does. And then over here, I think he mentioned a climax. Why is he mentioning a climax here? Why? This is not a breakout. It's at the top of a wave. Imagine this as a wave, straight, like one big green wave. Would you expect smart money to buy at the top of a wave? Or would they buy at the bottom of a wave and sell at the top of a wave? In this case, the biggest volume is at the top of a wave. So who do you think they're going to buy high? Obviously not. They're going to buy low. Where did they buy low? Here. Buy low. Right? And relative to the swings, again, this is at the top of a swing. Are they going to buy at the top of a swing? No. They're going to sell. Someone else is going to buy, because that's how specs work. They buy breakouts. They buy highs. Why? Because there's a philosophy of buy high and sell higher. It's just so stupid, but anyway, goes down, goes up. Here is the climax, and it's at the top. And this major climax, no, it's a minor climax. I think it is. I don't know the rest of the chart. I really don't care, but I know that this is minor relative to the swing. That's major relative to the trend. Why is a climax not a breakout? If it was a breakout, it would be across these highs. Instead, it's at the top of a swing and tagging that resistance area. So that's where I expect it to be, right? Because that's where it's going to be. It's just going to be there. Alright, so all these concepts form the foundation. Without knowing all this, you're not going to fucking figure out anything on the rest of the bar charts that he's doing. You gotta go through the basics, and this is the basics. And don't for a second think that this is somehow 19 something. The mechanisms that make this are same today. If you look at a tape, like a tape or a print, there's three elements. There's the price, there's the volume, and there's a timestamp. Those are the three elements. There's no other element. I mean, you could add other shit like, block trade, this, that, whatever. But the basic print is the same. And that's why those are the three factors, by the way. You have a price that a volume or order came in at a certain time. That's true then, is true now. And that's why these are the fundamental factors that for understanding supply and demand in the market. Take care, bye.